First of all, thanks, man.
Thanks
to come here. It was very, very nice when I first met you through Instagram. And I was like, I need to talk with this guy, to be honest. No, really, I need to talk with him. So guys, this is Dan. It's Daniel, right?
Yep.
Dan.
Yep.
For those who are more friend with you, Dan. Dan is a trader. For how long have you been trading?
Full time since 2020.
Since 2020.
But yeah, I've been dabbling in trading since my teenage years.
Yeah, okay. Yeah, so we're just having a chat, We are in Gold Coast. Unfortunately, you guys can't see the view yet. Seeing it at the moment.
Beautiful. Pacific Ocean.
Yeah.
As far as you can see.
Far as you can see. And I can guarantee to you that the Earth, it's not... Anyways, we're not going to get in this conversation. It's not flat. Anyways, so we was just having a chat before, and Dan was in sort of an investment mindset since he was 14 or...
Yeah, about 16.
Yeah, about 16. And, this is pretty same as me. I was sort of in mindset investment since I was 14. And hopefully one day I can be like you. Because we are sort of sharing the same road.
Yeah, similar. Very similar.
So that's pretty cool. His dad was an investor as well, same as mine. So we were just having a very, very nice chat before at the hotel. And now we're here. So thanks again, man, to come here.
Thank you, appreciate it.
Take all the trip, 1.5 hours by car, guys. So please subscribe, give us a thumbs up. Follow Dan on Instagram as well. What's your...
Just Dan R. Emmerson.
Okay,
just
cool.
My name.
Yeah, just his name. And first question, why Forex?
Yeah, look, I mean, my trading career, I guess you would call it, I've kind of dabbled in a little bit of everything. And for me, the one thing that I find interests me the most is the Forex market. I mean, it's the most liquid market in the world.
Yep.
It just, to me, from a macroeconomic perspective, it just makes the most sense, and I guess is probably the easiest to be able to analyze. Because I've tried a little bit of everything, to be honest.
I think everyone did.
Yeah, I mean, I've traded in commodities,
yes,
CFDs, futures, stocks.
Yes.
In crypto.
Yes.
I dabbled in the crypto when it was the cool kid thing to do.
Everyone. Yeah, crypto was like, oh, I invest in crypto.
To the moon.
Yeah, to the moon. Yeah.
No, I think when I started to look at Forex and take it seriously, I realized that was just something that I'm more drawn to, mainly because of the way that I'm able to analyze it and understand how and why it moves. To me, that's the biggest factor.
And another thing is, I think it's the easiest market.
Yeah, I mean, I wouldn't say any of them are easier than the others, but there's definitely, I guess, reasons why I believe Forex is probably a better place to trade, especially if you're learning to trade, than other places. A lot of people over the last few years have been drawn into that cryptocurrency trading market because it's the cool thing to do. But the reality is it's an unregulated market with very low liquidity when compared to other asset classes, which makes for increased volatility, which as a trader is your best friend. But whilst you're learning, it's also probably not.
Not your best friend. I can guarantee you that.
Yeah.
Especially on commodities.
Yeah, absolutely.
It goes like that.
It does. It moves very quickly.
Yeah,
look, for me, I think Forex, it's a very good thing to trade because it has enough volatility for the markets to move enough that we can capitalize on those movements without it being, completely random and unsafe. And I think it's probably a very good place for new traders to learn, especially. It just moves, in my opinion, a lot nicer than most other asset classes.
And another thing is, most of the people, because, everyone needs to work to pay the bills. So when you start trading, if you're not under 18, if you're under 18, you still have to work. So you still have to, whatever your work is, if you're a McDonald's making a lunch, or if you are CEO of a company, whatever, you are working. So you have a commitment with your work, certain hours a day. And certain markets, let's say indices, or let's say stocks, they won't be open 24/7. And Forex is open 24/7.
Yeah,
so only Monday to Friday to us, but the Forex never closes. You know, but you can be trading London session, you can be trading Asian session, you can be trading New York session, whatever session suits you better. Is all of the sessions tradable? Would you say that?
Absolutely. I mean, otherwise there would
because
be...
everyone has, sorry to cut you, because everyone has that question, you know, like, I only trade Asia session. I only trade London session. No. Only New York. Like, what's the point?
Yeah, I mean, look, ultimately it just comes down to every individual and their circumstances, their preferences, and their edge at the end of the day. I mean, ultimately, any time of day really is tradable. However, there are some conditions which are more favorable than others. You know, so like living here in Australia, the Asian session we know is a lot less volatility most of the time and a lot less liquidity. So the markets in most pairs will generally move less. And that, but it doesn't mean that it's not tradable, because if it wasn't tradable, then how would the Asian region, you know, swap currencies and trade and all these things? I mean, people forget, because they think they get stuck in this tunnel mindset of this is just trading. I'm just trading Forex to make money. What they forget is that this is just a function of the global economy and the movement of money from one asset to another for a reason. People forget that.
Exactly.
And that will happen 24 hours a day, 7 days a week.
Exactly.
So although, you know, we're here to talk about trading today, and trading's what we're all about.
Everything you want, we're going to talk.
Yeah, I mean, it's one of those things that trading, if you are a trader, it's very easy to get lost in that world and that world alone and forget the context.
Only on CFDs.
Absolutely.
Only on there,
absolutely.
You know?
And it's fantastic. I encourage people to find what suits them. You know, and like I was saying a little bit earlier, I've moved through different asset classes, different trading times, different strategies to find those things that work for me. And I encourage that for everybody. But at the end of the day, anything can be made to work.
Yeah, I get you. And another thing is, you know, now coming a bit of on trading, well, the view here is beautiful, like,
isn't it?
Is really, really beautiful. I hope you guys can listen to us, because there are some helicopters going back and forth here. Pretty busy day on these cars. Anyways, so there are a lot of people that say, you know, another thing about trading is, oh no, only 50 minutes work. No. Only trade daily time frame. No, day trade doesn't work. You know, only swing trade works. Swing trade doesn't work. Only day trading works. And then there's, it's so funny, because, you know, I talk to a trader, he says something. I go to another guy, he said the complete opposite from that dude. It's like, oh God, who I listen to now? You know, because in my opinion, everyone has your own style, as you say, as your own preference. If you want to trade Forex, go trade Forex. If you want to go trade indices, go trade indices. But, you know, bear in mind, would be totally different markets, totally different, like, inputs, you know, different outputs as well. So what do you trade basically? You trade Forex, 100% Forex.
Pretty much.
But how do you, like, I don't want your strategy, I want you to give them sort of a opening mind. What works for you? You know, is it indicators? Is it, you know, like crossover RSI, you know, something like that?
Yeah. Oh, look, and that's the thing is, I think, I mean, you've had a multitude of guests on this podcast already, and I think where I'm probably a little bit unique is that I've very much come from the retail trading background.
Yes.
I'm not an institutional trader. I haven't come from a hedge fund. I haven't worked in banks. I don't have a macroeconomics degree, all of those sorts of things. So I've very much come from the retail mindset and approach, and I feel as if I've tried it all. Whether that is strategy, whether that is the asset that I trade, the time of day that I trade, all sorts of different things. I feel like I've tried it all, and ultimately what I have, I guess, settled upon for me is unique to me, and it doesn't mean that that's going to work for you. So in my journey, I have traded a huge portion of my trading career with a very much retail mindset, using indicators, using price action, you know, whether that be some sort of an RSI crossover or something to do with EMAs or MACDs, or I mean, pick an indicator, doesn't matter. I mean, everyone, I find when you first come into trading is that it's it's difficult at first because it's a whole new language, and we're looking for the easiest way to make progress.
Yes.
And the most attractive way
yes.
For new traders is to find an indicator generally that will tell them when to buy and when to sell. And that's fine. And these things do have their place sometimes for certain people. But are they the be all and end all? Absolutely not.
No.
I've had success using multitude of different indicator-based strategies. However, now I don't use indicators whatsoever. So ultimately, one thing I want to get across is that it's not about like this technique is bad and this technique is good.
Bad. Yeah.
Even though I like to take a little bit of a humorous approach towards technical analysis only.
I think everyone does. After you discover what really works.
The only reason I do that is because I've done it myself. I'm not trying to tease people. It's essentially me, I guess, showing my own evolution as a trader. And for me, I've evolved to a point where I don't use those retail strategies anymore because I've now learnt what I believe to be more professional approaches to trading.
100%.
But I would not write off completely technical analysis because there are lots of people who've made lots of money using lots of different strategies.
100%.
So who am I to say that it doesn't work? I know plenty of people, myself included, that have made money using those things.
Exactly.
But it doesn't mean that it's wrong.
Now, it's a good point actually. Look at yourself, like let's say, before you start to have a more professional approach towards trading, you know what really works.
That's right.
Because you were making money throughout whatever you were using, let's say moving averages or candlestick patterns, you know. And now you here living full time with trading, and you have a very, very professional approach to trading. We're going to talk about this later. And you look at yourself, a few years back, and you think about that, like, how was possible to make money the way I was trading? So this is the proof that everything can work.
Absolutely. And ultimately, and this is the one thing that I try and get across to the people that I try and educate, is that it's not necessarily, your strategy should not be the center of your approach to trading. You need to be the center of that. And the thing is that I've used in my trading career multiple different strategies as I've learned something, and I'm very hungry for knowledge, so I always want to learn and try new things, which is why I've done so much. And I've had things that worked really well for me and some things that have not worked well for me, but the consistency across all of those approaches was me. And my only job, and your only job, I guess, as a trader, is to figure out what is it that suits you best. And if you're profitable and you're not losing money, then that's it. That's all you need.
Yes, I completely agree. And it comes down to, I think, another tool that you're always gonna need to have on your strategy is manage your risk.
Definitely.
Go to whatever place you want to go. Hedge funds, JP Morgan trading floor. First thing, manage your risk. Without managing your risk, going full lot sizes, about the leverage, we went to get the coffees, and anyways, we get to this later, but why do you need the 1 to infinity leverage? Why do you need this? If the ASIC already told everyone that it's not safe to go there, why do you need to go? It's the same thing as like a red button, and it says don't press, and you go and press.
That's right.
Like, why you need to press the button?
That's right.
There's no need for it. And I think the risk management would 100% be something you need to have. Whatever trading strategy, whatever bot you use,
absolutely,
you need to have it there.
It's the cornerstone of making money in trading. And there's many different versions of the saying, but the best way for you to thrive in trading is to survive in trading. Because if you're a brand new trader and you open up a trading account and you put $1,000 into that account, and you slowly lose that money because you are not managing your risk, then you will have $0 in your account one day and you can no longer trade unless you add more money to that. Whereas if you are able to mitigate your risk down to a smaller amount, because you're going to lose, everybody loses, regardless of what you'll hear online.
I agree.
Is that if your losses are smaller, it simply prolongs your ability to learn and improve. And the longer that you do that, you will succeed.
It will give you more life.
Absolutely.
It's like a game.
Absolutely.
You know, you need to sort of get your shield.
Yep.
That's your risk management. And people will hit you, you know, like you just need to be protected.
Absolutely.
I completely agree with that. Well, now it comes like, you know, like, okay, so if there is risk involved, will you use your own capital, or you going to run to prop firms?
Yeah.
Or what are you going to do? Because that's another thing. Right now, you know, lots of prop firms are being popular in the game.
They're everywhere.
And I haven't seen, like, for real, 4 years trading, you know, and 3 years probably are no prop firms, 2.5 years are no prop firm. And I've never seen so much prop firms coming out. Every week there's one new. Every week there's one new prop firm in the market. And I don't know what's happening. I don't know, because people think the prop firm is the holy grail.
No.
They will pay the subscription. They will pay for someone to pass them.
Yeah.
You know,
Don't even start me on that.
you know, they will pay someone like $1,000 for someone to start to you know, like to go there, and then they will lose the whole money. So, you know, what would be your takes on that?
I mean, look, I've got nothing against prop firms as a concept. I think they definitely have their place, but they're also really, in the scheme of things, they are a relatively new tool. And that's all they are to me, is that they are a tool. They're a tool that you're able to leverage for you to be able to help in your trading.
Yeah.
Like, so me personally, I've used both my own personal capital and prop firms in my journey, and they both have their place. You just need to realize the place that they serve. So for a lot of people, the reason that they're attracted to prop firms is because they are undercapitalized. They don't have the larger amounts of money to be able to trade. And so what that does is it limits your ability to make more profit. Now, does that mean that you can't trade with a small account? Absolutely not. You definitely can. It's just going to take you longer.
Longer, yeah.
So this is where people are very attracted to be able to use prop firms, but at the same time, they believe that that is the holy grail, like you said. And it's not. It's just one option that you can use.
Yeah.
So and that option comes with restrictions. They have rules around how much you need to make, the time limits. They don't all have time limits these days, but many of them do. They have, you know, how much you're allowed to like draw down per day. Yeah. Many of them have slightly more complex rules.
Look, I completely agree with you in taking, you know, I think you can start on a small capital, as you just mentioned, but it will take so much longer. This is another question I want to ask you later on. How much capital do you actually need? Because this is one question that I probably get a lot. How much capital you need to live with trading, to trading, you know?
Yeah, of course.
But anyway, so just getting to the small capital. I think if you have a small capital, we are not talking about $100, all right? Just to make very, very clear here, all right? At least $1,000, I think it would be a decent amount.
Oh, and that's your training wheels. That's your learning money.
Exactly. That would be, and you know that you're going to lose.
Yeah.
If you win, you're lucky. Congratulations. You know, but you're not gonna take $1,000, put it into your broker account today, and tomorrow you're gonna have a $2,000 account. It's not gonna work.
No,
not gonna work. And about prop firms, just to finish this question, you know, I think once you are sort of like on a professional level of trading, I would say, once you know what you're doing, you can go for a prop firm.
Yeah, absolutely.
You know, and that's what you've done. I think, you know, like once you know what you've done, once you know your strategy, once you have the basic rules, that's another thing.
Yeah,
we want to talk later as well. You can go and apply for a prop firm. Don't pay someone to pass the trading. Whatever for you.
It doesn't help you in any way.
You're gonna lose anyways. No. If you don't know how to pass, how are you gonna be continuous trading with the same rules that you had to pass?
Yeah. I see a
There's
lot of
no
people
sense.
paying for EAs or bots that are going to pass their challenges, or paying other traders to pass them for them, and that's all well and good. But at the end of the day, you're still left with a live account that you can't trade. So it's a complete waste of time and money. If anything, you're actually just putting yourself 2 steps backward in your journey.
Yeah, and you're wasting time.
Absolutely.
And wasting a lot of money.
Yeah.
You know, I had a friend, I'm not going to tell his name, but my friend Ruwan from UK, he lost, I think, like nearly $2,000 to $3,000 just in paying prop firms.
Yeah.
And he said, look, I've been to prop firms. He always say that, you know, like it was just a waste of time, waste of money. I could have this money right now sitting on my bank, invested in another thing, or on my broker account that I could be trading. I could be losing my money, not giving to someone, because I don't know if I want to really get into that depth of how prop firms work.
Yeah. Yeah, I don't, to be honest, I don't think it's too important for the average person out there to know how they work. But what the average person needs to know is, what is the place of a prop firm for me? So for me personally, I've used prop firms on and off throughout my journey. And the way that I look at them is that they are a way for me to be able to leverage a little bit more money than I currently have.
Yep.
To be able to draw profits. And those profits are not for me to live off. They are for me to add into my current account. Yep. Because that's the money that I'm going to trade, because it's not restricted. So either way, I mean, there are upsides to using prop firms in terms of, if you're going to pay, say, $1,000 for a prop firm challenge, then the most money that you can lose is that $1,000 that you paid. That's fantastic. Whereas, if you put $10,000 into your own account, you can lose all of that.
Yeah.
So there are some upsides for using prop firms, and they have their place. However, for me, they should just be a temporary tool that you can use before you are able to do it better and do it yourself. It's the same as if you're going to build a house, you can put every nail in of that frame using a hammer. Absolutely, you can do that. Are you going to build the entire frame using a hammer? No, you're not. You're going to have a nail.
Yes.
It's the same, they both achieve the same thing, but it's about knowing the purpose of that tool and how it's going to help you or hinder you in the ultimate journey of you making money.
See, that's all you need to know about prop firms. But look, guys, I think it would be better if you can go test it out whatever you want. We're not saying that you have to do what we are saying to do, but that's all personal take, and I completely agree with you.
Yeah.
And we're just chatting down the streets, and that's exactly the same thing.
Yeah. I mean, with the people that I teach how to trade, I encourage them, because most people don't have enough money lying around to put in their broker
already
account.
there, yes,
that's right. So I encourage people, the ones that I teach, I encourage them, once they show that they can be a profitable trader on demo.
Then yes.
Then go and do a prop firm challenge.
Yes.
And then you can use that money for a while to be able to build your own capital. And then once that is sufficient, you don't need the prop firm anymore, and you trade your own capital. For me, that's the process. So I'm not against prop firms. I encourage it for a lot of people, but it's about just knowing its place.
Look, good point now. And that question just came here. I didn't have this question planned. Actually, nothing here is planned. We're just having a chat, actually. That change from demo account to real account, do you think there's like a really, really big impact on the mindset? Because there's lots of people, they say like, okay, so I'm profitable on demo account, but when I go to trade real account, it's a disaster. Do you think there is a big impact, or do you think there's something missing on the strategy from that person, or what's the big take on that?
Yeah, I don't think it has anything to do with strategy, to be honest. I think it's a very individual thing.
Okay.
And I think there are arguments for both sides here, in terms of, if you trade on demo, that's great because there's no risk. And you can make all those errors, and there's no downside.
Test it out.
Fantastic.
And everything.
Right? And you can prove to yourself that you're profitable before you risk any money, whether that's through a prop firm challenge or whether that's your own money. So that's fantastic. However, trading demo also doesn't expose you, at least not to the same degree, to what many people suffer, which is the psychological side of trading, of risking money and fear and greed and all those things that we hear about. So that's another thing that can be a downside of trading demo first, is that you are essentially delaying your ability to feel and adapt to those feelings that most people do. Because everybody does at the start of their journey. You know, like I'm at a stage in my trading career where I'm not FOMOing late into trades and chasing losses and all those sorts of things, but I have been there. And I think everybody has. And there is nothing like risking your own money to feel those things. Yeah. And it's like anything, you have to build up a tolerance. You've got to face your fear to be able to get over your fear. It's the same as if you want to get better at running, you have to run. So if you want to get better at trading your own money, you have to trade your own money. So, I mean, there'll be some people say, no, demo first, then go real. And then there'll be some people who say, don't bother with demo, just go straight to real. And ultimately, I think it's an individual choice for most people. For me, as someone who teaches people how to trade, I personally encourage them to do demo first, just to get the skill set down first. To be able to see, like, can I actually execute a trade properly? A lot of people will execute
how to actually put TP, all of those things.
All sorts of things. So for me, the demo is about building the skill set and the ability to be able to execute in the market in a live environment. And then from there, you can then extend that period to be able to test your strategy and collect data and back testing and all those things. And then from there, moving into trading, you know, in a live environment.
Look, that's actually a good point. And I sort of, you know, when I started to trading, I had the same opinion. It was like, fuck, I need to know how to trade first. I don't want to get my money there because it's my money, you know. I was working like long hours to get paid very, very base salary back in Brazil in those days. And I needed to know how to trade first, so then I put my money in. And I used the demo, and I noticed if I put my money there without being using the demo, I couldn't even know how to close a trade.
That's right.
So I was like, well, that's lucky for me because I decided to choose the demo first. At least I know how open an order, to close an order, set the TP, you know, all of those things. But yeah, that's and I think the same as you. I don't think, you know, the transition from a demo to a real account should be a big thing. It should occur as natural as waking up and, you know, walking.
That's right.
Because if you need to make money, you know, I think first of all, you can't have the pressure to make money. I need to make money today. I need to make money today to pay my rent. And then you get the rent. Okay, the rent's $530, and then I have to more $120 on food, and then my car allowance is gonna have $900 a week. I need to make at least $900 a week. And then on Friday, you are negative 900. And then you're like, oh my God, what I do now? Then you run to your dad and ask for money. So that's pretty dangerous about, you know, that's the main thing. And being a, like 100%, you know, like, please guys, go and follow him on Instagram. He posts every day how your life is, and a lot of questions and answers as well. And you can say, like, you came from ACY podcast, and he will answer you. And, you know, having a full-time trading job, how can you manage these? Like, okay, I have 5 days a week to trade. Do you have targets? Do you have those types of things that a lot of YouTube says that, oh, my target are this? I don't think.
No. I mean, at the end of the day, right, is that the market is a very dynamic and massive organism.
You can't,
and
exactly.
I am just a speck inside that environment. So for me, I mean, look, it's really nice to be able to set targets and achieve targets and all of those sorts of things.
Accomplish it,
oh,
right?
Absolutely. And everybody feels good when we plan and we achieve something, right? But at the same time, I also realize that the market is such a dynamic environment that it's going to allow me to either make a certain amount of money or not. It is not my job to turn up to the markets searching, hunting, and trying to squeeze every dollar out. Now, don't get me wrong, I want to do that.
Oh yeah.
But whether I can do that and whether I should do that are two entirely different questions. So, I mean, and I'm saying this from experience, is that I've gone through that stage of like, I need to make 5% a month, I need to make 10% a month, or I need to make X% per month. And what I've found is it actually doesn't impact my results whatsoever.
It doesn't
because
help you anyway.
No, for me, it's process. If you focus on your process and you perfect your process, the outcome takes care of itself. And this is a huge error that I see in so many traders, is that they're so focused on the outcome that they never actually perfect their process. And so they never achieve their outcome. So it's the same. If you want to lose weight, you know what you need to do. You need to eat less
and exercise.
Yeah. It's
then
not hard.
Yeah, then you think, how I'm going to do that? Oh, no, I have to exercise. So then I'm not going to do it.
It's exactly right.
Yeah.
But if you focus on those basics and you do those basics really well, you will get the outcome that you want. And it's exactly the same with trading. You don't need to add complexities. You don't need to add all the fancy indicators. You don't need signal groups. You don't need the guru mentor who makes, everyone a Lambo owner. You don't need all that stuff. You just need to do the basics, and you need to do it well, and you need to do it in a way that works for you.
Yeah. One thing I would say already, and I know I can be on the comments, everyone can say lots of things. I don't care. I'm just telling the truth. If your guru has a Lamborghini and a Patek Philippe and whatever house and this and that, it's a scam.
Yeah.
And just telling you, because I've seen it all. I've seen from really, 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 really rich people. They don't care about look. I've seen from all the brokies, and they are trying to be the best people on the look. So basically what they always try to do is they try to convince you from the look.
Yeah. I mean, at the end of the day, they're not selling. Well, they're selling you.
Yeah.
but they're selling you a lifestyle. And they're selling you an idea. And
the
they're selling you a
trader
dream.
lifestyle.
Yeah, and it's really not a thing. The thing is that, like, for me, I really don't like the idea of that trader lifestyle.
I don't like it.
At the end of the day, you can achieve a lifestyle that you want, whether you are a trader or not. I mean, there are plenty of jobs. You can go out there and get a fantastic job, and if you are good at managing your money, you will have a fantastic lifestyle.
Yes.
You don't need to sit next to your pool pretending that you're trading on your laptop and try and sell that idea to people, because it's not the reality of the industry, and unfortunately it's something that has been sold to the masses, and a lot of people are buying it. And I believe that we're at a sort of a turning point in the next 12 months or so, where all of that false marketing, which is exactly all it is, will be seen through, and a more professional approach will eventually
come across.
I guess the thing is the way that I live my life and my lifestyle. Like, I do very well with trading, but I'm not going to go touting all of the things that I do all over social media and I don't need to worry about all of that stuff, because that's to do with me.
Yeah.
And just because I do that doesn't mean that you can do that.
Agreed.
It's you've got to do the work, you've got to do the time, you've got to find what works for you, and you can achieve the same or more. It's and I'm a long way from where I want to be at the same time. So it's not about trying to emulate someone or go, I want what they want. It's more about you.
I want to be like them.
That's right.
Yeah, I agree. Now, coming back again just to close this question, coming back again for the targets, I think what you say was perfectly defined. When you set a target and you achieve the target, you feel so good. Because this is basically from the humanoid, I would say, mindset. Like, once you set something and you get it done, you feel so good, right? Because since you was a children, everyone told you, get this cup and put it from here to there. Oh, congratulations.
Yeah.
Congratulations, so good. So when you set a target and you achieve that, you're gonna feel good. But all the pressure, all the FOMO, the fear of missing out, all the hours being shrimped in front of the computer trying to get the trade, it's gonna kill you.
Absolutely.
So I don't think it's worth.
No,
I don't think it's worth.
And like I was saying before, the market being so dynamic is that there will be some times when you make way more than you expected.
Exactly.
And there will be times where you lose way more than you expected.
Exactly.
And it's a dynamic thing, and it's not about any one point in time. It's just about, like I said before, perfecting your process and just being committed to that. and analyzing it as you go, because what you do today may not work in 12 months time. And
Exactly.
being open to that idea that your processes may change, your outcomes may change, and you as a trader and how you trade will change.
You will have to adjust yourself
Of course.
towards the market. I completely agree with that. And now it comes with the question, like, what may work for you may not work for other ones. So it's not only one thing. We are not telling you, there's only one thing that works. It's not about that. But I think that I'm always going to hit on the same tab. I think fundamentals, macroeconomics will have a huge take on Forex.
Oh, absolutely. I mean,
Because it's Forex, it's a currency.
it's foreign
First of all,
exchange.
Exactly.
People
So
forget that's what it stands for.
just coming, just a little bit here on baby peeps at the moment. So Forex is what?
Foreign exchange.
Exactly. So what's a foreign exchange? It's a country money. So what's a country money? It's a politics. It's macroeconomics. So that's the holy grail about trading, So I don't think people using technical analysis can predict, what a central bank will do on the next meeting.
No. And that's the thing is, like, and I said it before, technical analysis 100% has its place. I still use forms of technical analysis.
Yeah.
And most traders, I would say, do. In whether it's a lot or a little, I would say it is a part of most, if not all traders' approaches. But for me, who's gone from someone who was only technical based, knew zero about macro. And now has learned a lot about the macro, and that is now the primary reason why I trade and how I trade is with that fundamental bias. It's completely opened up my eyes to how unimportant the technicals can be.
Yes.
And so how I trade just purely from a technical point of view these days is so much simpler and easier and faster than what I've done in the past. And it can be. It doesn't need to be complex. It doesn't need to have large vocabulary. And you don't need to rely on your charts as much as you think.
Yes.
Do you still need to use them for most people? Yeah, 100%. It helps you with entry points, exit points, TPs, stop losses, you name it. But at the end of the day, for me, I need to have context for every trade, which is something that most people lack. And so if you're just looking at when the price gets to this candle, then because that one engulfed that one, I'm going to go short.
That's the point.
That's fantastic. But what does that mean in terms of the Australian dollar versus...
Why did it move like that?
That's right.
Yeah.
And there'll be a number of different reasons. People will tell you it was the algorithm that did that.
Yes.
It was supply.
Yes.
It was because it hit this EMA.
Oh, no.
Great, right? Those things will appear on the charts. That's why people learn them. That's why people teach them. However, the driver behind every move is fundamental. Safety and yield are the only two reasons that people put money into and out of any asset. Safety and yield. It forms the market sentiment of risk on versus risk off, and that's why money moves.
Fantastic.
And there are reasons behind fundamentally why money moves based on those concepts. Then afterwards, you can then look at a chart and go, oh, you know what? That price there, that order block, that EMA, that support resistance level, whatever it is you want to label it, that is where you'll see, that also happens to align with the fundamental reason why it should move from here to there. Mm-hmm. And from there, it will completely open your eyes as to how and why the markets move. It gives you context and unbelievable confidence behind every trade. And it'll also filter out all of the crap so that you're not looking at some random chart and going in one direction because this EMA said so.
This is music to my ears, I would say. Because what happened is, I have lots of people coming to me and say someone liking to like a Lamborghini here. I think you guys can hear. What? Oh, wow, that's really good. Anyways, so as I was just saying, lots of people come and say, well, the market moved on that way because it touched it third time on the trend line. But what's the difference between the second and the third? I don't know, but they told me that the third time is the special time. So I'm going to sell on the third time and I'm going to set my TP just on the perfect sweet spot of the support jump below there, needs to be there, and then the market will fall. Okay, but why? No, because I told you, so third time, like, no, but why did it move like that? No, third time, like, no, why? Why did the Australian dollar, whatever was the base currency, weaken on that time and the quote currency strengthened on that time? Why? I want to know why. Was that because interest rates was up, interest rate was down, inflation? What was that?
That's right.
People don't know. And they forgot, again, that Forex is foreign exchange. Yeah. So what one country is doing that will strengthen against another country that is weakening. Let's say whatever, JPY, CHF and JPY. Why would you buy JPY at the moment? There's no reason. I don't have an answer for you. No, there's no reason for you to buy Japanese yen. So I would never, at least this period of time, right now, buy JPY.
Not yet.
But we know that maybe in the second half, there are a few talks going on that they will transition from one policy to another policy, right? So if you don't know what policy is, I would suggest you to go and search on Google what monetary policy is, what a central bank does to control the rates. And if you don't know, we have a negative rate on Japan. And this is a big take. Why would you put your money as an investor, as a FDI, a foreign direct investor, on Japan and not on Swiss?
Like I said, that's the second point that I made. I said safety and yield.
Yes.
At the moment, there's no yield.
Yeah, that's why I use the CHF JPY.
That's right.
That's a really good one.
Spot on.
Yeah, so, there's no reason.
That's right.
So you should have, behind every trade, there is a reason why it's going up or why it's going down. The market is not random.
No. And the thing that people forget is, and there's always going to be this argument of like technicals versus fundamentals.
Oh, there is.
But what people don't realize is that it's a really nice harmony between the two, and that these major economic events and data prints that happen every single month, they are the fundamental drivers for the direction of the market, which determine the risk sentiment.
Yep.
And that will then determine the money flow in and out. In between all of these different data prints is when, I guess, the normal trading stuff comes in terms of people will want to go short from a premium price, and they will want to take it down to a discounted level.
Yeah.
And why? How come if the JPY is so weak, how come it goes up sometimes? Well, guess what? If you're shorting the JPY, you have to take profit at some point, so the price will retrace. And it's in between all of these fundamental drivers that you can have a little bit more of a technical bias. But for me, it's always the secondary reason why you should be looking at a chart in the first place and how you should be trading an asset.
Look, this is so good to have this talk because, I think we merge actually pretty well, and another thing is, we're not saying again that technical analysis doesn't work. As a trader, you will need both. You can't only survive with, because I've tried to trade only fundamentals. I've done this test already, and I've done the only technical as well. I've done 2 tests, not on real account though, because I didn't have time and didn't have money. So if you only trade fundamental, and you know something's gonna happen, whatever, and you just place a trade on the fundamental side of the market, you're gonna suffer a bit of drawdown.
Absolutely.
And it's gonna have a big ouch on your capital.
Yeah.
So this is not good. But when you're trading only technical, I can't explain it, but you have to sort of be in the charts 24/7 in front there, trying to spot on the entry to get the perfect spot.
Yeah, and you still, at the end of the day, even if you do get it right, and it's very possible to get it right.
Oh yeah.
You still lack the context as to why.
You don't know why, and you can't replicate it. What was I say? Replicate this again and again and again. But then when you merge both of them together,
it's the sweet spot.
It's the sweet spot. So I'm not saying that only fundamental will work or only technical will work. Try to find a way, to put them together and have as best friends and work your way up and up.
And the simpler the better.
Yeah.
To be honest, you just need to know the simple reasons fundamentally why one currency will go up and the other will go down.
Yep.
And then a simple technical approach.
Yeah.
It does not need to be complex. You don't need to have all of these crazy add-ons and extras. It doesn't add value and it won't improve your results.
Here we are. And we just finished to talk about the sweet spot between fundamental and technical analysis. And, Dan has a family, so he can't be here too much time with us. I'm joking. Anyways, so now I think only have one or two more questions. And I think the question that everyone would ask you, what's your strategy? But I don't want to know what's your strategy.
Okay.
Because it won't help them.
That's right.
It won't help them. It won't have anything to do with them.
Yeah.
So I would ask you a different sort of approach.
Sure.
What would you say to them to go afterwards? So go to, let's say, go learn about this.
Sure.
And implement this on your trading.
Yeah, absolutely.
Is trading a systematic approach, as everyone say? You need to have first line needs to be like that, second needs to be like that, done. Okay, buy or sell. What's your take on that?
Yeah, I mean, for me, like I was saying earlier, is that I believe that trading for everybody is a very individual approach.
Exactly.
From my experience, obviously I have my own bias in terms of what I know works for me and what I teach others that works well for them. Ultimately, I think the best way to approach trading is from a holistic point of view. So I would encourage people to learn the basics about fundamental and macroeconomics. Understanding, especially if you're going to be trading in the Forex market, but even if you are trading in other markets as well. I mean, if you are trading in commodities, you need to know why would people be buying or selling commodities. There are fundamental reasons why. Even if you are a cryptocurrency trader, there will be fundamental reasons. Yeah, but not just that, but there's also going to be fundamental reasons. Like right now, as we record this, there's lots of talk about a Bitcoin ETF.
Oh yeah.
Right? And there's lots of people saying, if this gets approved, Bitcoin's going to go to the moon and things like that. Yeah. I guess that's your cryptocurrency version of your fundamentals. So regardless of what you trade, I believe having a fundamental understanding of why and how that asset moves will only advantage you. Can you trade without it? Yes, you absolutely can. But trading with it gives you more information and therefore more confidence, which I think as a trader, confidence is so important. Outside of that, you don't need to go down the rabbit hole of looking for the newest, shiniest YouTube technical strategy.
Yeah.
I would encourage
99.9% win rate.
Yeah, with all of the YouTube
money, Lamborghini. Oh my god!
But I mean, at the end of the day, I think like we've been saying is I think having a holistic approach and a simple approach and something that is tailored to you is what works best. Now, the reason that I educate in the trading space is because unfortunately there is a lack of high quality education when it comes to trading. It doesn't mean that it doesn't exist. It absolutely does. There are some fantastic resources. There are some fantastic communities. There are some fantastic groups. There are some fantastic mentors or gurus, whatever you want to call them. There's fantastic people out there and things that you can learn from. But unfortunately, they are the vast minority. Yeah. So all I would say is where you choose to learn from, just make sure that you verify, make sure that you trust, and make sure that it suits you and that you are attracted to that for the right reasons. So it might be all well and good that your mentor drives a Lamborghini, but does that actually help you learn to trade or not? Yes or no? Simple as that. So
that's really, really good.
Yeah, I mean, look, I've learned from many different resources, many different groups, communities, mentors, strategies, you name it. I've tried almost everything. And what I found is that if you want to survive in this market, you need to find what works well for you. If you are forcing something because it works for them, but it's not clicking for you, then it's time to move on and find something that works for you. Yeah,
that's exactly with me. I think everyone. That's actually. It's not very related to trading, but I'm gonna say that because there is sort of a relation to trading as well. Everyone that crosses your life, it can be a guru mentor, it can be the guy with the Lamborghini, it can be a really good person, it can be a friend, it can be whatever. You will learn something from them, and they will learn something from you. So you guys are exchanging ideas. Basically what we are doing right now here, me, Dan, and you guys, we are exchanging ideas. I knew a few things, but he knew much more than me because he's much more time on a professional approach on trading than me. So I knew a lot from him today, and I hope you guys did as well. But there are people that you will learn what not to do.
And that still has value.
And this is the point. And this still has value. So it doesn't only count when you make money from somewhere. If you lose money from someone, then you need to know what is that person using for you to not use. So if someone crosses, one day on your life again, saying the same thing that one was saying, no, mate, look, I'm fine with that. I've tested out already. I'm fine. Keep moving.
Absolutely.
So I think this is one thing here. And I think, last question. I always ask this question. What's the market conditions right now? What are you thinking about the market? You think there's something going on? Any opportunities going on?
Well, it's the bear market that never happened, right? it's funny because the financial situation globally at the moment is very unique. But they always say that this time it's different. Ultimately, it's never really that different, but it will have unique characteristics. So, are we at a point in time where things are likely to change from a fundamental point of view?
Yep.
Potentially. We all know, that the US is in a little bit of a pickle with their debt situation, and they're kind of kicking the can down the road, sort of thing. And we know that one day that's going to come to a head. But I have a bit of a saying that the changing direction of an economy is like trying to turn a cruise ship. You can do it, but it takes time. It doesn't happen overnight.
No.
So, that's where you'll see a lot of stuff out there at the moment saying, the US dollar's going to crash and it's no longer going to be the reserve currency. Now, will that happen? One day, potentially.
But not tomorrow.
Not tomorrow.
Yeah.
So we don't need to worry about it right now. We just worry about what we can control and the information we have in front of us. And then if things change in a massive way, we adjust. It's as simple as that.
It's the same thing as we're just talking about the JPY, the Japan, the Bank of...
Can't wait for that to change.
Yeah, I know. He messages me every day about that.
Opportunity.
Well, yes, I completely agree. I think once the monetary policy changes on the board, things will have 100% different, FDIs, all of the money supply is going to come into Japan because, look, they're in negative right now. So look at how much potential they have. Huge to the upside.
That's right.
So the numbers there give us a good match.
Absolutely.
And, just talking now about the USD. Look, there are so much talkings about China will take over US.
The BRICS currency.
It's hard to say because people think that will happen next week.
No. Well, the Chinese economy is vastly underperforming right now.
Yes.
It was the grand reopening after COVID.
Yeah.
And it hasn't quite happened.
And that's good. You can relate these on JPY, on New Zealand dollar, and Australian dollar.
Absolutely.
You can relate Chinese yen on those three currencies that I've just mentioned right now. Why? Because basically we are very close from China, and secondly we have a massive balance sheet between those 3-4 countries that I've just mentioned. So if exports and imports in Australia is not going well, you can just see China is doing something. If China is not doing well, Australia is not doing well as well. It's always going to be like that because they have partnerships.
Right.
It's like a business. If a partnership doesn't go well, then all the business won't go well as well.
It's the flow of money.
It's the flow of money, exactly. And in your opinion, where's the money right now?
The money is spread. The money is spread. Obviously money has been flowing into risk-on assets. So if we look at, the US indices, for example, rocketing up.
Yeah.
They're up like 50% from the lows.
Yeah.
Bonds are up.
Maybe there. Yeah.
Gold went up, but has then gone back down again.
Yeah.
It's. Ultimately, like I said, it's a temporary shift or a temporary flow of money, just based on the need for people to put their money somewhere where it feels safe and where they can yield the most money.
Yield the money, yeah.
Now, at the moment, people feel safe enough to be able to put their money into risk-on assets like stocks because they're yielding more. When that changes, and it will, then they will pull them out of stocks. Stock market will come down. They will put them into a safety asset. That could be gold. That could be bonds. That could be Bitcoin, for all we know. So until that sentiment in the market changes, the money will continue to flow until there is a reason for it to deviate.
You know, it's very tricky because I thought, I was quite bullish on the Australian dollar in the beginning of the year with the whole China reopening thing, because it would have a massive impact.
Huge.
If those two countries, the balance sheet would, start to increase, but it didn't work out pretty well. We can see that the things are not doing well in Australia, especially the central bank here are quite bearish at the moment. I would, quite dovish, sorry. But I have in mind that if China do the Holy Grail reopen, Australian dollar will perform pretty well against,
Absolutely.
especially if the JPY still not shift the monetary policy. We could have a huge shoot up on AUD JPY. So basically, this is the sort of talk you need to have when you're trading. It's not about, okay, what's your resistance? Okay, Fibonacci, please. RSI? What number on RSI you use? I don't care what number on RSI you use. I just want to know, what is your take on the economy?
The funny thing is, when you have a clear and basic understanding of how the fundamentals work,
this is so basic what we just talked.
And the thing is, like I said very early on in this chat, is that it will filter out all of those things that you shouldn't be looking at, and it will get you to focus on where is the money flowing in and out of the most, which is going to give you the largest amount of volatility, which you can then capitalize on as a trader. And then when you marry that up with your RSIs, your supports, and anything else, anything magical that you want to do, then you have context, you have reasoning, you potentially have timing, and then you will also have prices. You marry all those things together, that's how you come up with fantastic trade ideas. And even then, they won't all work.
No.
But you
will know why.
Your context is 100% there every time. It's not just, that was a fake change of character. That's not a thing.
No. Yeah, that's so. Anyways, I can't say bad words here, but you guys know what I want to say. So that's a good thing, because my friend got asked on, and I think you got asked it as well on Instagram questions. What's the pair you trade? Whatever pair needs to be traded. Whatever pair needs to have money there. It can be euro, it can be AUD, it can be JPY, it can be gold.
I follow the money. I don't follow the charts.
Whatever. You know what I mean? Like, where the money is, I will trade. That's it. Where the volatility is, where you just mentioned, you can make sure I will be there. I will be, on the party. All right, then. Next and last, any book you would recommend for them to read, or you're not too much into books?
Well, look, I think that reading books about trading can have their place for certain people. I've read all of the basics around your Mark Douglas stuff and your Trading's in the Zone and your Market Wizards, and I'm not discounting those resources at all. The people who wrote those resources are phenomenal at what they do, and they give amazing messages which are really helpful for a lot of people. Me personally, hasn't had a massive impact. And again, it just comes back to what I've been saying this entire time, is it just comes down to you as a trader. What do you feel is missing for you? And if you feel that you need help and guidance when it comes to, especially psychology around trading, there are many different books that you can read.
I agree.
And that may or may not help you. For me personally, I think there is no better teacher than experience.
There you have it. And just to finish it up, I think I've read so many books already, like Trading the Zone, Rich Dad Poor Dad, you name it. I read it. Nothing, to be honest, very, very honest, I don't want to upset anybody. It wasn't a waste of time, but it didn't help me to get where I am right now.
You have to do.
You have to
Action
go there and
takers.
do. It's funny because you just mentioned a few minutes after before the example of like, okay, I'm gonna lose weight. I have to eat less and exercise. So if you wanna get out of, let's say, depression or whatever you're having, you're gonna go and read a book. Are you only reading the book, or what are you doing? It's not like flipping papers that will help you do something.
It's the action that you
You
take.
need to go and do the action.
The lessons
Every
that you learn.
action has a reaction. That's the basic. All right, man. Thank you so much again.
Thank you. It's
It's
been a
my
pleasure.
pleasure to have you here. And guys, please go and follow Dan on Instagram.
Thank you.
And I see you in the next podcast.
See ya.